So to start with, there are there are three master directions. Okay, three major master directions that you would need to deal with. Okay, the very first being the NSI master direction, that is non-systemically important NBFCs master direction. Another is systemically important master directions. Okay, so NBFCs that are systemically important master directions for them. The third one is the CIC master directions, that is the master direction for CICs. Also, there are some other master directions that are there. There are master direction for HFCs, P2Ps, then there is a IT master directions. All those master directions are there, but majorly NSI and SI, because the reading material that were shared earlier, उसके अंदर तुमने देखा होगा 90% of the NBFCs or even 95% of the NBFCs in India ICC. So these ICC comply with NSI and SI. So that becomes the most crucial ones. That given, first thing we need to discuss upon is what is the NSI or SI NBFCs. So these are the type of NBFCs जो हमने कल पूरा डिटेल में डिस्कस किया. In the session 1 we discussed in detail. Three types of NBFCs जो मैंने पिछले सेशन में नहीं किया था वो मैं इस सेशन में करूंगा. Okay. Now to discuss with this is the erstwhile regulatory framework, not the present but the erstwhile. I would say the erstwhile regulatory framework. वहां पे हमने NBFCs को तीन उसके बेसिस पे वो किया था, क्या बोलते हैं, सेग्रीगेट किया था. One was deposit taking NBFC and other is non-deposit taking NBFC. If you are a deposit taking NBFC, you will but naturally go and comply with the SI master directions. So the name of the master direction itself is deposit taking and systemically important NBFC master direction. So for deposit taking NBFCs as well as systemically important, क्या होता है उसमें मैं आऊंगा, एक ही master direction है. Another type, so second categorization is non-deposit taking. Now non-deposit taking NBFCs are further divided into two types, non-systemically important and systemically important. What was the difference between these two entities? कि non-systemically important NBFCs were NBFCs that asset size was less than 500 crore. Systemically important NBFCs were जिनका asset size more than 500 crores. That was the simple bifurcation. So to summarize, deposit taking NBFCs or non-deposit taking systemically important NBFC एक master direction, non-systemically important अलग master direction. Because these are smaller entities, we are saying कि systemically they are not very important. Now, just to give you a brief, what does systemically important mean? So systemically important means any financial sector entity that can cause a domino effect in the financial sector. So when we say कि this particular entity, financial entity, is systemically important, means कि if they default or if there is any disruptions in their operation, that can have a systemic effect on the entire financial sector of India. So these are important, hence we need to regulate them more profusely. That's what I would say. Now, of course, as I mentioned, this is the erstwhile framework. ये अब नहीं लगता है. Then why am I getting into the details? वो तुम्हें आगे समझ में आएगा, because still when I talk about these classifications have changed, but still जो master directions we are still complying are the old ones that are based on these classifications. So किस classification को क्या follow करना है वो यहाँ से निकल जाता है. Hence I gave a brief intro of what was there. Now coming to the present. Okay, so now there is a new classification that was under scale-based regulatory framework. So when I talk about scale-based regulatory framework, वहां पे 4 layers RBI ने prescribe किए, जिसके अंदर we divided the NBFCs. What are these 4 layers? Top layer, upper layer, middle layer, base layer. To give you a brief, top layer is empty until unless RBI feels that some NBFC is very important and they pose a very big risk to the entire financial sector, or there is some reason that they believe that this NBFC requires an enhanced supervisory review, they won't have any NBFC in the top layer. So top layer is basically RBI ने किसी को बोल दिया तुम top layer हो तो तुम top layer हो. ठीक है, वो आरबीआई के खुद के मेजर से जज करने के लिए कि वो कैसे जज करेगा, बट आरबीआई बोलेगा भाई तुम टॉप लेयर तो तुम टॉप लेयर. At present, at today's date, we do not have any NBFC that is notified under top layer. The just below that is upper layer. So upper layer हमने क्या बोला कि these are the NBFCs that are their operations are so large that they are usually similar to banks, or even in some cases these NBFCs are so big that they can compete with banks or even more significant than banks. They are such large entities. So in entities को हमने place किया upper layer. Now upper layer के लिए भी they have set criteria कि if you are a top 10 by the asset size you will automatically fall. If you are below that, then we have top 50 में हो तो we have some quantitative qualitative factors जिसके बेस पे RBI analysis करेगा और prescribe करेगा कि भाई upper layer में कौन होगा. But यहाँ पे भी see the approach is very simple. RBI has given out a list. RBI has published a list. वो NBFCs जो उस लिस्ट के अंदर है, they will fall under upper layer. Very simple classification. So RBI ने आपको बोल दिया आप upper layer, तो आप upper layer. That's it. The major classification difference जो सेल्फ जज है उसके पर, आई एम नॉट सेइंग सेल्फ जज, आरबीआई की वेबसाइट पे तुम्हें लिस्ट मिलेगा कि आप किस लेयर में फॉल कर रहे हो, बट एट द सेम टाइम कई बार हम लोग को आरबीआई को इन्फॉर्म करना पड़ता है कि हमारा क्लासिफिकेशन चेंज हुआ है. तो मिडिल लेयर एंड द बेस लेयर, द वेरी बेसिक, आई वुड गेट इनटू डिटेल की क्लासिफिकेशन कैसे चलेगा. आई हैव अ ह्यूज चार्ट फॉर इट कि कौन सा बेस लेयर जाएगा, कौन सा मिडिल लेयर जाएगा. बट अ वेरी बेसिक क्लासिफिकेशन इज कि जो पहले 500 करोड़ हुआ करता था, अब वो 1000 करोड़ हो गया है. कि असेट साइज अगर आपका 1000 करोड़ से कम है तो आप बेस लेयर में हो, बट अगर आपका असेट साइज 1000 करोड़ ज्यादा है एंड यू आर नॉट इनटू टॉप एंड अपर लेयर, तो आप मिडिल लेयर में हो. बट दिस क्लासिफिकेशन इज नॉट दैट सिंपल. इसमें कुछ और कॉम्प्लेक्सिटीज है दैट वी विल डिस्कस फर्दर. दिस इज सम अप्रोच दैट आई डिस्कस कि भाई टॉप 10 अगर हो तो आप अपर लेयर में जाओगे, मिडिल लेयर. आई विल कम टू दिस इनटू दिस चार्ट. सो दिस इज द चार्ट दैट बेसिकली टेल्स अस कि भाई आप किस एनबीएफसी किस कैटेगरी में फॉल करोगे. नाउ क्लासिफिकेशन इज वेरी इंपॉर्टेंट बिकॉज आपके क्लासिफिकेशन से ही डिटरमाइन होगा कि आपका कंप्लायंस क्या रहेगा. द रेगुलेशंस एप्लीकेबल टू यू आर डिटरमाइंड अंडर विच क्लास यू फॉल. So any NBFC that you're dealing with, you're wanting to talk about compliance, the very first step would be to determine under which class would they fall. Because without classification, you cannot be judge of which regulations they have to comply with. As I mentioned, NSI and SI master directions are still there. Of course, CIC master direction, HFC master directions, they all are there in place so they can comply with their specific master directions. But for ICCs, specifically to check whether they have to go for NSI or SI, that becomes a very crucial point. वो यहाँ classification से determine होगा. So to start from the corner, सबसे पहले यहाँ पे corner में you will see three types of NBFCs: P2P, AA, NOHFC. I will give you a brief. तीनों क्या होता है. So P2P are basically NBFCs that simply provide a platform on which lenders and buyers meet. Lenders and borrowers meet. That's the simple. These are usually platform for individuals like you and me. We can just go on that platform. Someone from you wants to borrow, they can raise up their demand. Okay, I'm wanting to raise this finance from this particular, I want this much loan at this. Wo, I have money, I have some extra cash, I can go and lend you. So these platform basically acts as a connecting junction between individual lenders. That's what, there can be other lenders as well, but usually they are for individual perspective. These are P2P. But when you talk about these P2P NBFCs, they themselves do not engage in lending. They do not lend by themselves. They just provide a platform. Hence, very justified that they are always considered under base layer, irrespective of what they're doing. If you are a P2P, whatever your asset size, whatever your level of operations, you will always be under base layer because you are not engaged in lending itself. You're just providing a platform service. That's why. Another is account aggregators. Account aggregators is a new concept that's catching up very fast in India. It has more to do with data collection, providing correct data to the financial sectors. So, and collecting borrower data and maintaining those. So their operations are again not related to lending or investing or any direct exposure to the financial sector. They are more data centric NBFCs. Hence, they are always under base layer. Third type is non-operate NOHFC. So the full form is non-operating holding financial company. So these are basically the entities that are formed to hold the shares of banks and other financial entities of the group of that bank. So there are some guidelines by RBI for incorporation of bank. One of the way you can have a bank is you can have a non-operating holding financial company that can hold the share of that bank. So they are basically holding companies of banks. So because they're holding companies of bank, they become an NBFC. So from these are the entities that do not have any operations. So as the name itself says, non-operating. So operations kuch hota nahi hai, isliye we always keep them under base. So these are three types of NBFCs. Then moving to the second part, ICC, MFI, Factor, MGC. All these I think we already discussed in the first session. The new term is MGC, Mortgage Guarantee Company. Just to give you a brief, again, the name is very clear, Mortgage Guarantee Company. So they provide guarantee. So what they do is ki bhai, you are getting a loan. So the entity or the financial sector entity, or you go to them, you pay a fee and they will provide you a guarantee. There is only one mortgage guarantee company in India currently, that is Indian Mortgage Guarantee Company, IMGC. That's also majorly funded by government companies, and so a majorly government funded entity. of course, through government entities, not directly, but so only one mortgage guarantee company currently operating in India, IMGC, nothing more. So if you are under any of these ICC, MFI factors that we discussed yesterday and or your MGC, first step is to check whether you're deposit taking. So if you're deposit taking, you will definitely fall under middle layer. So if you recall the पहला वाला approach जो हमने पहली स्लाइड पे डिस्कस किया कि if you are deposit taking, you will automatically get into systemically important. So you can relate यहाँ पे you can relate middle layer to systemically important, non-systemically important to base layer. So जब मैं रिलेशन में देखूं तो deposit taking would always go under middle layer. If you're non-deposit taking entity, so यहाँ पे थोड़ा classification branched out हो जाता है. There you saw there were only two branches. by systemically important, non-systemically. यहाँ थोड़ा सा branched out. तो सबसे पहला टेस्ट आता है कि do you have customer interface and public funds? If you do not have customer interface and public funds, you fall under base layer. I will take you a simple example. You are an NBFC, ठीक है, जिसका asset size है say 5,000 करोड़. But what are your operations? You are funded entirely by equity from some shareholder, and you just invest those funds into market. So you just make investment. So you do not have customer interface. Neither you have raised public fund. A public fund क्या होता है? This also we've discussed in detail in session 1. Okay. Now, if you do not have customer interface or public fund, you directly go under base layer, irrespective of asset size. 5,000 crore, 10,000 crore, doesn't matter. You are under base layer. However, if you have customer interface or public fund, any one of these if you have, then we check the asset size. Okay, if your asset size is less than 1,000 crore, this I discussed in the some time back also. If your asset size is less than 1,000 crore, you go for base layer. If the asset size is more than 1,000 crore, of course, if you're top 10 based on asset size, you will go under upper layer. If you are under top 10, basically you will go under middle layer. Okay, this is there. Moving to the second section, these are the type of entities because of their operations, they are directly taken under middle layer, or they are directly taken under middle layer until unless classified under upper layer. So आप middle layer में रहो. What are these entities? Housing finance companies. So if someone can recall, in the session 1 itself, I told you that HFCs are having stringent compliance requirements compared to an NBFC. So here is a little stringency that's coming up. So imagine a HFC that has an asset size of say 200-300 crores. A HFC of 200-300 crore will still fall under middle layer, but an NBFC of similar size would go under base layer. So here's the difference that's coming out. Okay, so HFCs are specifically smaller NBFCs would face a higher regulatory compliances compared to a NBFC. CICs, again the same thing, irrespective of your asset size, you will fall under middle layer. Now, this question sometimes is a very prominent one. Ki CICs, they themselves just hold shares into shares of the group companies. Their operation is merely to hold shares. And sometime back, I just mentioned that CICs cannot do any other business other than holding shares of group companies. So just for an entity that's holding shares, or sorry, I would not say holding shares, only holding shares in company. I would rather say they only make investment in group company, of which majority is holding shares. There can be debt also. So the question can arise ki why is such an entity posing such a risk that it will fall directly under middle layer and not under base layer? Here I will frankly say I do not have an answer, but the answer can be under ILNFS fiasco, because ILNFS was a very big CIC that defaulted, caused a huge systemic risk. Hence, after that fiasco, that actually made NBFCs run for their money. That was a very bad situation for NBFCs. That was the very time when DHFL went bankrupt. So I think that fiasco might be the reason after which CIC regulations became much stricter as well. So even under SBR regulation, that can be the case. So that being said, then there are SPDs that are I think that's the specific term. These are standalone primary dealers, and IDF, that is infrastructure debt fund, they only directly fall under middle layer. These are the entities, not very successful concept in India, so not getting into much detail. Now there is a little difference on government we have given separately, but if asset size is less than 1,000 crores, it's base layer. If 1,000 crore more than, for government owned NBFCs. So this is basically the classification of NBFCs that's there. Here, one thing to understand is that the SBR regulation says that wherever the term middle layer is used under the regulation, it would be correlated with, so it will be read as systemically important under the master directions. To say that a middle layer NBFC would require to comply with SI master directions, that is the systemically important master directions, whereas a base layer entity will comply with NSI master direction. Upper layer and top layer would of course comply with SI only. There's no question to that. So this is the main factor that I wanted to discuss. कि सबसे पहले जब हमने classification check किया entity का, उसके बाद we will get to know कि which master direction I have to comply. So which master direction I have to comply? If middle layer, SI, if base, NSI. I hope it's clear till here. One more concept for today's session that I want to discuss is on the multiple NBFC concept. Okay, now what is a multiple NBFC concept? This multiple NBFC concept is given under the SI master direction, okay, which says ki when I'm determining, so understand that this is the erstwhile direction. So that talked about 500 crores. I will come to the present scenario as well, how it operates in the current scenario as well. But just to understand, previously what was there, ki when I'm seeing that 500 crores limit for a SI, at that time, I will not see a particular entity in standalone basis. Okay, what I mean by a standalone basis, ki where there are other NBFCs in the group or NBFCs that are promoted by the common promoters, these NBFCs asset size would be clubbed together. So I will take an example. You are an NBFC of say 300 crores, and there is another NBFC in your group that is also 300 crores. So you would say both these NBFCs are NSI? I would say no. Normally, if I see by 300 crores, it's NSI. But because your group company has your group has another NBFC that also has asset size of 3 crores, what I will do is I will add up the asset size of these two NBFCs. So what happens is the asset size becomes 600 crores, and both these entities now become systemically important. The same concept would also be applicable in the case of SBR. Okay, so when I'm seeing this 1,000 crore limit, this 1,000 crore limit would again need to check this 1,000 crores on a multiple NBFC basis criteria. But if you are clear by now, then I will move to the next a deeper step into it. Now, one thing to understand is that previously when I talked about systemically and non-systemically important NBFCs, these NBFCs classification were purely based on asset size. So the difficulty was never there. But if you come to the SBR, you may notice I can have an NBFC, one NBFC. Say I have an NBFC that is 800 crores worth, but it does not have customer interface or public funds. I will not take example of 800 crores. I will take the example of say 1,500 crores. I have a 1,500 crores asset size NBFC which does not have customer interface, nor is it access to public funds. You would say does not have customer interface, does not have public fund, goes under the base layer. I'm very good with it, fine. But I have another NBFC which has customer interface or public funds or both, whose asset size is say 500-600 crores something. Normally, if I see on a standalone basis, though, that entity would also fall under base layer. But if I apply multiple NBFC concept, my total group assets of an NBFC, that is, if this entity, smaller entity is 500 and that entity is without customer interface is 1,500, this becomes 2,000 crores. So aggregate basis, I'm beyond the limit. But on the standalone basis, I'm not. Generally, multiple NBFC would not have been a difficult concept over here. You both would classify. But here the point to consider is that the larger entity is actually base layer. It will be base layer irrespective of its asset size. So here, what can be the view? How do we determine the classification? Here, the answer is that the larger entity, irrespective of its asset size, because so what I have to do is I have to check the classification after clubbing the assets. So I will do that for both the entities. So when I see for the larger entity that is without customer interface public fund, its asset size becomes 2,000 crore. Would it still qualify under base layer? Yes, even after aggregation, it will qualify for base layer because that's what I mentioned, irrespective of the asset size. So even after aggregation, it would continue to be a base layer. However, when I talk about the smaller entity, whose asset size was say 500 crores, now its asset size after aggregation would be considered to be 2,000 crore. And because of this aggregation, now this particular entity would classify as middle layer because its aggregated assets crossed 1,000 crores. Okay, so that is how classification works. If you're middle layer, comply with SI. If you're base layer, comply with NSI. Of course, if you are a specific entity like a housing finance company, you have a separate master direction. You're a ICC, you have a you're a CIC, you have a different master direction that you need to comply with. P2P AA also have their separate set of guidelines for that matter, but you need to comply with. So by today's session, I think you must be very clear that if given a balance sheet and an annual report of an NBFC, you can at least determine which master direction or which circular would be applicable to them.